What's going on, traders? Today, we're going to be breaking down the 10 simple steps to profitable trading and the 10 steps that if you just follow, dial these things in, learn how to strategically implement these 10 things, your trading is going to be 10 times more simple, 10 times more effective. You're going to put yourself in a position to make upwards of 10 times more money in the market. Over my 10 years of experience, I've distilled down all of this knowledge and experience that I have into these 10 core steps that are going to completely change how you look at the market and how you trade the market. Your trading is going to be, again, like I said, simple. It's going to be more effective. You're going to find your trading to be easier. It's going to be easier to make more money in the market. There's going to be less confliction, less noise, less guessing, and you'll just overall have more clarity. And I'm sure you're thinking, all right, cool, Josh. Why should I listen to you? Why are these 10 steps the 10 steps that I should follow to be a better trader? I have 10 years of experience, so I've been where you're at. I've made the mistakes. I spun my wheels for years. I lost a lot of cash in the market. Typical story that most self-taught traders have. So I've been in the trenches. I've faced all the same struggles that you faced. I've learned everything there is possibly to learn about trading, the indicators, the strategies, the setups, the different types of markets. And I've been able to take all of this information and all of this knowledge and experience I have and really, like I said, distill this down into 10 simple steps that if a newer trader just mastered these 10 things and implement these 10 things, they're going to make good profit from trading, and it's going to be simple. So not only do I have my own experience and have I found my own success in the market, being a full-time trader for the past 6 years, I've actually had the honor of coaching over 1,000 traders over the past 5 years. So I have experience leading other traders and helping those individuals find their success in the market as well. So we're going to break this down, talk about these 10 simple steps, but I want to go ahead and upfront set a few expectations. There's still going to be some work that you need to put in. Take some initiative. Go out there. Continue to learn further about these things we talk about today to fill the gaps in. And don't worry, at the end of this training, I'm also going to give you a few extra golden nuggets to help you fill some of these gaps in, but there's still going to be work that you have to do to go out there and further educate yourself, to acquire this information, to piece this together, to have clarity on how to implement this. But this is going to be your framework. This is going to be your blueprint. This is going to be the starting point of building a foundation that leads to profitable, successful trading, right? So you're going to want to take this, continue to run with this, and further dial this in. All right, so let's go ahead and dive into it. The 10 simple steps to profitable trading. And these are the 10 most important things that I know for a fact if you dial in, implement these things, you're going to be a rock star trader. So number one is you're going to want to sit down and structure out your account, right? So what's your account size? What's your risk parameters based on that account? And then going ahead and getting that structured based on the type of setup as well. So a quick little example of what I mean here to get the account structured and to obviously set up those risk parameters is just start with what the account size is. If you have a 10K account, you want to break it down into 3 parameters, 1%, 2%, 3%, right? 3% is the max risk you're allowed to lose on any trade. That's the maximum you can go. So you already know max risk is 3% or $300 of your account. 2%, $200, 1%, $100. And then attach these to the type of setup. Now, you may not have this information now, but as you learn what we're going to discuss in these 10 steps, you further educate yourself and implement this, you're going to start to have clarity on what are my A+ setups that work 80% of the time? What are my B+ setups that say work 70% of the time? And what are my C+ setups, my average setups that still work more than 50% of the time, say 60% of the time, where I don't want to take, say, 3% risk on those. I'd rather scale down to 1% risk. And now you can actually attach your risk parameter to the type of setup to make sure that we always have consistency with our risk reward and our profits and our data. So go through and, get that built, get that set up, get clear on what this looks like, because this is going to be something that you need to follow on a consistent basis. You need to abide by the structure and the risk tiers and risk parameters that you've created. It's such a simple, easy step that takes 5 to 10 minutes to do. I've been coaching a lot of traders over the past 5 years. 80 to 90% of traders I've coached that even have a lot of experience, this is brand new to them. So go through, build that out. I actually do have a lesson on account structure and risk parameters. If you want it, hit me up. I'll send you a link to the training. Send me an email, josh@daytrading.com. Hit me up on social media. I've got you covered. All right. Step number 2 is learn how to identify key zones of support and resistance from the daily time frame. So like everything you see here on my chart, these blue rectangles, these blue zones are my key high probability zones of daily support resistance based on a simple methodology that I've created to identifying these zones. That's going to give you clarity on what areas you even want to trade off of in the first place. No more trading at random levels, no more guessing. You have full clarity on where am I looking to actually take trades? Where am I looking to sell trades for profits? Whatever the case is. That's going to give you a lot of clarity on where you want to even be getting in the first place to take trades off of these daily zones. I've created a simple training on these key zones of support resistance. I explain my methodology that I've created to help you come in and start to implement your daily zoning. If you want that, hit me up. I'll send you a link to that specific training. Okay. Step 3 is going to be supply and demand concepts, being able to identify where the big money and the smart money is moving in and out of a certain stock. So you want to be able to go in and learn supply and demand concepts. Simply put, it's going to give you another key zone that you want to look to trade off of. Just like support resistance, you have key areas that you want to trade off of. Same thing with supply and demand concepts. It's a different concept. It's a different method to identifying these zones, and how we trade these zones are different. But simply put, it gives you another high probability area to be looking to take your trades. Guess what? I have a lesson on supply and demand concepts. Who would have thought? Josh is just hooking you guys up with everything you need to succeed in the market. Hit me up and I'll send you the lesson for supply and demand concepts, right? Step number 4 is learning how to read price action. Just because the stock gets to one of these key levels and key zones doesn't necessarily mean you just want to take the trade. Okay, you want to learn how to read price action. What's actively in real time taking place at these key levels, right? If you find a key daily zone of support and the stock's price moves into it, why will the stock's price move to the upside? The only reason the stock's price will move to the upside off that zone, if there's an imbalance, if there's more buyers than sellers. If you have 80% buying taking place down here and 20% selling based on just simple supply and demand concepts, right? What is going to drive price up? The simple fact that we have substantially more buyers than sellers at this area. That creates the imbalance. That's where we see price move to the upside. So taking that back to price action, in real time, you could clearly see, based on how these candles are moving at these key zones, you can see what's going on. Do we see more buyers present? Or do we see more sellers present? Or do we see an equal battle between buyers and sellers? So now, with your ability to read price action in real time, when we get to these zones, you'll be able to see if there are more buyers than sellers present. If so, that's going to validate your entries. If you come down to a key zone and you're reading price action and you see there's more sellers than buyers at that time, why would you want to take the trade long? Why would you want to get long and play calls off that support level if you clearly see there's more sellers than buyers? Price is going to have a hard time going up. If anything, we're going to see it move lower because we have that imbalance, more sellers than buyers. So you need to get really clear and get really good at reading price action, okay? Number 5 is being able to utilize some really popular trading tools and trading indicators to identify your confluences. That's number 5. confluence. So a confluence essentially is just having multiple reasons to take a trade. All right. So if I'm using a fib retracement tool, right, I could put a fib retracement tool here just as an example. So now I have this fib retracement tool, right? Let's say another confluence is going to be fair value gap analysis. I'm just going to go throw up a really crappy fair value gap just to give you an idea of what I mean, right? Go learn how to identify proper valid fair value gaps. Learn how to use fib retracements, fib extensions. Learn about the VWAP indicator and utilize the VWAP as a moving level of support resistance. Learn about uptrends and downtrends and how to properly draw out these uptrends and downtrends, how to identify intraday order blocks or intraday supply and demand basing candles. These are just different forms of technical analysis. How we identify daily support resistance is completely different than how we run a fib. And how we run a fib is completely different than how we run a trend line. And how we run a trend line is completely different than how we identify valid fair value gaps. But when we start to run the fib, we see we have a fair value gap. We see we have an uptrend, right? And we all see that these three different forms of technical analysis are starting to line up at the same price point. That gives you a confluence or multiple confluences. Now you look at this trade as, I'm not just looking to take this trade off a key support level, because that's just one reason to take this trade, is it's at key support and we expect price to bounce and move to the upside. We see that it's coming back into uptrend support. So you have a key support level from the daily. That's one reason to take the trade. Now you have uptrend support. That would be two reasons to take the trade. And it's coming back down to, say, the 50% fib retracement. That's the third reason to take the trade. And what you notice is every separate form of TA, technical analysis, is lining up right around the same price point. You start to notice the 50% fib lines up at that daily zone, which lines up at that trend line all around the same price point. That would give you multiple confluences to take this trade. So go learn the most popular forms of technical analysis, the most popular tools and indicators. And I'll go ahead and give them to you, right? So price action is a confluence. That was the number 4 item. Learn price action, and that's going to be a confluence. Learn how to run proper uptrends and downtrends. They're very well respected, very popular trading tool. And again, you're going to see uptrends and downtrends when drawn correctly. They're respected quite a bit. So learn trend lines, learn about fib retracements, learn about fib extensions, learn how to identify, higher probability intraday fair value gaps. Learn how to take the supply and demand concepts that you've learned across your higher time frames, for example, and implement the same concepts intraday on, say, a 5-minute time frame where you could see proper lower time frame supply and demand basing candles to be able to utilize those as confluence as well. Another popular tool that I use is the RSI to help me spot what I call bullish and bearish divergence when I start to see a reversal possibly setting up. So go learn about the RSI. Go learn about RSI divergence. That's going to be another powerful confluence that you guys can utilize as well. You always want to have multiple separate reasons to take a trade. The more reasons you have, the higher the probability the trade's going to actually work in your favor. All right, so go learn about those popular tools and indicators. Learn how to implement those. Now you're going to start to be able to identify confluences and have those higher odds of being on the right side of the trade. Then you're going to need to learn how to do OEP assessment. Okay, OEP stands for optimal entry point. You need to learn how to assess optimal entry points on your trades when utilizing those confluences. So to keep this simple, what this basically means is, let's say, and I'm just going to give you a quick example. I have this 5-minute demand candle. I run a fib retracement, and let's say I also notice that I have this little 50% fib retracement, and let's say we have another confluence. We're just going to throw it out there, right? And let's just say we have a very, very key zone of daily support. Again, this is not valid. This is not accurate, but I want to paint the picture of what I mean with identifying an OEP. So let's say this is the analysis that we've done, and this is valid analysis where we have this valid daily zone of support where price is coming back down into it. Well, we also notice we have this 5-minute demand candle that lines up with our daily support zone. And then we also have this fib retracement present, right? We have the 50% level, and then we have the fib's golden pockets. So when I'm identifying an optimal entry point, I'm asking myself, where do all three of these confluences line up and meet at the same price to the penny? Well, I just go ahead and take my cursor and I hover it over where all three of my confluences line up to the penny. And what area do I identify? I identify this area right here at, say, 603.47, right? At 603.47, it's inside of my daily zone of support. It's inside of my fib's golden pocket, and it's inside of my 5-minute demand. So out of this entire window of potential entries utilizing those confluences, we're identifying where all of those confluences line up at the same price. And so we're able to pinpoint the best of the best entry. That's how we assess optimal entry points when utilizing multiple confluences. So that's what that process looks like. And that will differ depending on the types of confluences that you use. But you need to get really good at identifying optimal entry points. So if you feel like you're guessing on your trades, if you feel like you're getting in too late because you hesitate on trades, it's simply because you don't have clarity on where the best entry is and why that's the best entry. Learn confluences, learn those popular tools and indicators, start to identify where all of these tools and indicators line up at the same price. It's going to be 10 times easier for you to identify the best of the best entry points. That's number 6, right? Then we got to build a freaking plan, right? We got to build a freaking plan, right? If you fail to plan, you might as well plan to fail. So learn how to build proper trade plans utilizing something that I've created called the 3 A's. It's a methodology to building trade plans. The 3 A's stands for analyze, assess, and accept. So obviously you want to do your analysis, analyze. We just did our analysis. We've analyzed with fibs, with daily zones, with intraday demand candles. We've done our analysis. Step 1 is complete. Analyze. Then we need to assess. What are we assessing? We're assessing our optimal entry point, right? We need to make that assessment. Where's the entry point? We need to assess where our stop loss on this trade is going to be. And obviously, we want to put a stop loss on the trade where the trade is, number 1, invalid. So at what point is this trade invalid? And where is my stop loss have the highest probability of not getting prematurely hit? So stop losses are key, and stop loss levels are set based on the setup that you're trading and based on the confluences you have. So I already know my optimal entry points right here. So assessing my entry is easy. But if I put my stop right here, I take the risk of getting prematurely stopped out of this trade. It's too tight. And even if it comes down to this stop loss level here, the trade's technically still valid. So why would I want to put a stop loss at an area where the trade's still technically valid in my favor? It makes no sense. But I recognize an area where my stop loss is valid at, right? My stop loss should go down here. Why? Well, because this is the area in which my trade is invalid. So on this trade, I don't want to see price come below the prior 5-minute swing lows. So I know that if we're going to come down and hit that support level, retrace into that fib, respect the fib, and then hit that demand candle, I know that price should hit and pop. And if price falls below those prior 5-minute swing lows, and we fall below all those confluences, this trade is now invalid. The odds of it working have shifted against me. So this is the safest area to put a stop loss to where I'm not getting prematurely stopped out of the trade, but I'm also getting out at the right time when the trade becomes invalid. Assess your target. Look left and assess, where am I getting out of this trade and why? Assess your position sizing. How many contracts or how many shares am I going to take on this trade to not lose more money than I should? Going back to look at your account structure. What are your risk parameters? What is the quality of setup? How are you going to get positioned? What risk parameter are you going to follow? Is it 1%, 2%, 3%? What's the quality of the setup so you can choose the right risk parameter? So then you could assess your position correctly. So you're assessing entry, stop, target. You're assessing how many contracts are you going to take. You're assessing time horizon. About how long do I think I'm going to be in this trade? If you think this is a 10-minute trade, you're probably okay trading 1 day till expiration contracts. But if you think this is a trade that you'll be in for a couple of hours, why would you want to trade 0 DTEs or even 1 day till expiration? You probably don't want to. You probably want to buy yourself some time and start shopping 7 days out to buy yourself more time and lower the theta if you're going to be in this trade for a couple of hours. So you're assessing all of these things to get really clear on the outcome of the trade. Worst case scenario, it stops you out. What's your loss? Best case scenario, it hits. What's your target? You're able to get positioned correctly. You're able to pick and choose the right options correctly as well. So get good at building those plans. And then the final A is acceptance. Accept the outcome of the trade before you even enter the trade. So if you get through that entire process of analyzing and assessing, and let's say this is what you've assessed. This is a B setup. I'm risking $500. I have potential to make $1,500. Can you accept this outcome? Ask yourself, can I accept the outcome? If I get stopped out, am I going to be unfazed if I lose $500? Yes or no? Yes, I will be unfazed because that's only 1% risk of my account on a B plus setup. That's the correct risk parameter. I'm A-okay with losing $500 on this trade. I accept that reality. If you get in and it stops you out and you're down $500, guess what? There's now no emotions. You're not pissed off. You're not frustrated. You've already accepted that reality. You knew it was going to happen if you got stopped out. You fully accepted it. It removes emotions. If you say, no, $500 is way too much risk. I can't stomach that. That is not the right risk parameter on a B setup. I need to actually be about half that risk at, say, $250. Can you accept a $250 outcome loss? Worst case scenario? Okay, that's a lot better. I can accept $250, but I can't accept the $500, and here's why. It gives you an opportunity to readjust your position size, say from 10 contracts to 5, so you only lose that $250, in which you can accept. So if you get in and for some reason, the trade goes against you and you get stopped out and you're down 250, you look over, you're not pissed off, you're not frustrated, you don't go on tilt, and you'll go out there and just chase different setups to try and make that loss back. Again, it's going to help you keep your emotions in check by accepting the outcome of the trade. So learn the 3 A's for trade planning. Analyze. What kind of setup do you have? Assess. Entry, stop, target, positioning, time horizon. And then finally, accept the outcome to remove and detach your emotions from the trade. All right? That's number 7, planning. Through the planning process, you're going to need to know how to do proper risk analysis when trading options and futures. Futures is pretty simple, right? If you're looking at ES, for every $1 of movement on ES, that's $50 per contract. So if you get in with one contract and ES goes up $1, you made $50. If you get in with one contract and ES goes down $1, you've lost $50. So it's easy to understand what your risk to reward is going to be when trading a futures contract. Same thing with MES, NQ, MNQ. If you don't know these things, you need to go out there and see what is your risk reward for every point ES moves, right, per contract, or for every point NQ moves per contract, right? NQ is $20 a point, ES is $50 a point. You're going to need to know how to, again, analyze risk based on what you're trading. Options are a lot more challenging, I'll tell you that. So you got to go understand what the Greeks are with an option, primarily the delta. And once you get clear on the delta, right, you're able to utilize that delta to calculate your risk reward on an options contract based on how much risk you actually have on the underlying stock. So for example, if I chose a 40 delta call option here, okay, and I'm risking 25 cents on the SPY's chart, I know I'm risking 25% of the delta. So what's 25% of 40? It's 10. So I know my risk per contract on this trade is only $10 based on the delta and based on how much risk I actually have on the underlying stock. You're going to need to know how to do proper risk analysis with options, with futures, and even shares. and get really good at being able to do those assessments and do that analysis on all of your trades as you're building those trade plans. So that ties into trade planning, but that's a completely separate topic you guys have to go out there and learn about, understand the delta, how to do that calculation to come up with that assessment as far as how much risk per contract based on the delta. And then do that for futures and shares, or regardless of what you're trading, get good at proper risk analysis. Number 9 is going to be trade management. So many traders will just stare at their P&L when they're in a trade. Why are you looking at your P&L? It's irrelevant. Why is it irrelevant? Well, you've already built your plan that says I'm losing $200 to make $600, and you fully accepted the outcome. Why are you looking at your P&L? Going down 10, up 20, down 50, up 100? It's only hurting you. It's psyching you out mentally. It's fucking with you. You see you're up $200, you take your profits too quick, right? You see you're down $50, you get scared, you go ahead and cut it for a $50 loss, and then the trade actually works in your favor, and then you chase it at the top and you end up taking a loss. It doesn't help you looking at a P&L when you're in a trade. You already know if you hit target, you're making $600. You already know if you hit your stop, you're losing $200. What good does looking at your P&L do? It doesn't do you any good. It psychs you out. It mentally phases you. It has you making impulsive decisions, right? Which is preventing you from capitalizing on winners, which is having you hold your trades too long to the downside, or getting out too early because you're scared or emotional by looking at that P&L fluctuate. The P&L is irrelevant. You already know the outcome. Stay focused on the stock. Manage the freaking trade. Continue to read price action. How is the trade developing? Is it still valid? Is there anything else that you notice, right? Does it blast through your target where you can actually get more money out of the trade by managing the trade versus your P&L? Because let's be honest, if you get into that trade and you're staring at your P&L, you see you're up $600, you're going to close it. But if you go back to the chart and see that it's very strong to the upside, maybe instead trail your stop up to that $600 take profit threshold. And if it stops you at that level, you got your $600. But if it goes up another dollar to the upside, who's to say you can't print $1,200 on that trade and turn that base hit into a home run? You're never going to do that or be able to do that when you stare at a P&L when you're in a trade. But if you manage the trade and continue to look at the chart and read the chart, the price action, how it's developing, you're going to find yourself in positions where you can actually get more than what you expected. You're also going to see times where you can get out of the trade earlier than your stop loss based on something that you see on the chart. If you're making decisions based on the chart to enter trades, why are you taking your focus away once you're in the trade? It doesn't make any sense. So stop trading and stop managing your P&L. Start managing the trade that you've analyzed. It's going to help you make better real-time decisions in the moment. And what you're going to notice is it's easier to capitalize on winners and get more out of these trades than what you thought. And a lot of the times, you're going to see reasons to get out of the trade early to mitigate and reduce how much risk you had in the first place. So get good at trade management and stop managing your P&L. Lastly, trading mindset. No, not trading psychology, not Mark Douglas trading in the zone, right? Unforeseen variables, probabilities, and odds. We're not talking trading psychology, even though trading psychology is very important to understand. But trading mindsets is completely different than trading psychology. So if this is new to you, you're like, wow, everybody classifies these two things into one. They're going about it the wrong way. Trading psychology is completely separate than trading mindsets. When I say you need to develop a mindset that supports your success in trading, I mean you got to go deep below the surface and do some real internal transformation to really develop a mindset that supports your success in trading. 80% of successful trading comes down to mindset. So it's crazy to think about it this way, but this is true. This is valid. I've done this for 10 years. I know this to be a fact. Everything that we just talked about is trading related. Zones, price action, confluence, trade planning, that's all technical related. 20% of your success comes down to mastering these things. So your success as a trader, 20% is tied to these items. Wow, that's not a lot. So where's the other 80% of my success tied to? your ability to dial in your mindset. Be more disciplined. Learn how to cultivate awareness. Be aware when your emotions are coming to the surface. Have discipline and self-control to not give into the emotions and make impulsive decisions. How to boost your internal self-confidence. How to rewire the subconscious mind. You need to go deep into neuroscience, NLP, the power of the subconscious mind. Read some of Dr. Joe Dispenza's books around neuroscience and NLP. But you need to really commit time to going deep into rewiring the mindset and transforming yourself internally, doing some deep inner work. This is by far the most important part of trading, and exactly why we brought in a dedicated neuroscience coach that coaches our trading students, and he's got 8 years of experience just involved with subconscious transformation and neuroscience. And that's why our traders get to profitability in like 2 to 3 months, because they take this serious day one. Once you dial in these trading related items, that's only the first step. Then you need to spend so much more of your time diving deep into transforming your mindset and developing a mindset that supports your success in the markets, right? So again, I gave you a couple little tips. Dr. Joe Dispenza has several good books on neuroscience. That's Breaking the Habit of Being Yourself, The Placebo Effect. You even have The Power of Your Subconscious Mind. There's a lot of really good books that exist that are going to help you understand neuroscience, understand that we can actually rewire the brain, and actually give us daily action items that we can follow and do on a consistent basis to actively start to rewire and transform our state of mind to, again, help us be more dialed in, disciplined, have awareness, have more self-control, have more confidence, learn how to become aware when our emotional state is rising, and how to, again, regulate those emotions and not act impulsively. That is going to separate you from 99% of traders in the market that don't even focus on mindset. And this is literally one of the main reasons our traders are able to get to consistent profitability in 2 to 3 months, because we focus on trading mindset day one. So don't tread lightly on this. This is the most important piece to everything. Okay, so account structure, zoning, supply and demand concepts, price action, confluences, OEP assessments, trade planning with the 3 A's, understanding risk analysis, trade management, trading mindset. I promise, if you just focus on these 10 core things, identify the gaps that currently exist, go out there, fill these gaps in, start to implement these things strategically, correctly in the markets, and live by this, you're going to notice you're a phenomenal trader. It's going to be easier to find trades. It's going to be easier to make money in the markets. You're going to be able to shorten this learning curve 5 to 10 times faster compared to traders that just go out there and learn random shit at random times, and they have no clear path or clear structure on what do I need to learn, what do I need to master to actually get to that first level of trading. Consistent profitability. Do these things, dial these things in. It's going to be a complete game changer for you. And again, account structure, support resistance zones, supply and demand concepts. I will hook you guys up with the exclusive free trainings that we have for those 3 things. So hit me up, josh@alphadaytrading.com. Send me an email on social media, The Real Josh Howerton on TikTok, Instagram, doesn't matter. I will send you a link to these trainings and help you with the first 3. Get those gaps filled, get these things dialed in. But now it's up to you to take some initiative. Learn price action, learn about those popular tools and indicators to have confluences. Start applying that and identify those OEPs. Start building your trade plans using the 3A methodology. Get good at doing risk analysis, manage your trades, and work on your mindset, and you are going to notice night-day difference with your trading in a short amount of time. So hopefully you guys enjoyed this breakdown, these 10 simple steps to get you guys to being profitable traders. If you guys ever do have any questions, you can hit me up, email me, send me a DM on social media. If you want to have a quick conversation around mentorship and coaching to help you get to that level of trading you want to get to a lot faster than going at it on your own, scroll down below. You can book a call with me. We'll have a quick conversation, see if coaching or mentorship makes sense. If so, we'll go through the details, see if it makes sense to bring you in and hit the ground running. So definitely scroll down if you want, check out more info, book that call, or just simply hit me up with questions, request those trainings. I got you guys covered. So as always, trade smart, trade safe, and stay blessed, and just keep crushing it.